So very good afternoon to each and every one of you. This is CMA H. Padmanabhan Pappanbhai, and the Webint series on Ind AS is going on very nicely. As you all know, today is Ind AS 105. Our GKR sir is very much here. Ind AS 105 is non-current assets held for sale and discontinued operations. And straight away, we are going to that Webint, and I request our honorable council member, chairman, regional council chapter coordination committee, and the journal and research wing of our Institute of Cost Accountants of India. I request Murthy sir to kindly start the yet another Webint series. In our studio, other than Dr. Murthy sir, we have our own beloved Chittaranjan Chattopadhyay sir, honorable chairman of BFSI board, and who is also chairman of Indirect Taxation Committee and many other task force and board. He is the chairman. And recently you all got a good news from the effort of the institute led by Chittaranjan Chattopadhyay sir regarding that cost accountants, only cost accountants name is being found for that particular audit that Chitoda will explain. So I request Murthy sir to kindly start this Ind AS 105 Webint as of today. Over to you, Dr. Murthy sir.
Sir, very good afternoon, Mr. Padmanabhan sir, Chairman of the CAT, my colleague in the council, Chittuda, Jainji, Riya Chaudhary, and today's hero, our speaker, research person, Mr. Gopalakrishna Raju. I'm extremely happy to share with you the good news, which will be dealt by my colleague, Mr. Chittuda, in detail. I always say that 143 always refers to love. Because of the law of 143 of Department of Income Tax, we have got 142 2A, and that is for my friend to deal with. And before and after that, today's again one more important standard. See, there are many standards issued by the institute, but this standard is the advantage, the uniqueness of this is they have issued education material. This notes has a big annexure to it, as enclosures and annexes. It has got more than education material, and it has got 41 typical questions. 41. That is for the importance of this standard. You will definitely be happy to read them once you listen to Mr. Raju. All the 41 questions, answers will be a speech like you. You can enjoy them very easily and remember them, whether you're auditee or auditor or student, you can easily remember them. And just one simple principle: any asset, any stock, anything what we deal, I'm referring to inventory, is priced at lowest of the two things, that is price costing policy. Same thing applies for also assets held for sale, asset which I am converting it to for salability. So I will change the principle and go ahead. Accordingly, we have very interesting, very useful, and very meaningful practical issues in this particular standard. I we should not consider them as current assets, that's all. But valuation principles apply as per the law, and very interesting, very useful. And I am also very anxious to hear my colleague in the profession, Mr. Raju. Thank you, Mr. Chairman. Thank you very much.
Thank you so much, Murthy sir. So nice of you. So after one or two Webint wherein Chitoda was very busy with other institute activities, professional activities, he is back with us here. Of course, last week he was attending the chairing one session during this exact same time of Regional Cost Convention of Eastern India Regional Council. And previous Sunday he was with the very famous Indian economist. He was busy in that particular meeting. So welcome back, Chittaranjan Chattopadhyay sir, our coordinator, who was with us in the first Webint. This is the fourth one of this series and first one of February. And next Webint onwards, we are planning to bring one chief guest CEO for this function, for this Webint. So I request Chitoda to kindly take charge as coordinator, and after your deliberation, welcome our Gopalakrishna Raju sir to address on Ind AS 105. Over to you, Chitoda.
Thank you. Thank you, Pappanbhai, our very nearest and dearest CMH Padmanabhan, the council member, not only council member, he is actually the he's showing path to the young CMAs in this country through this excellent program on Indian Accounting Standard 105. Very frankly speaking, this Sunday, every Sunday is India Accounting Standard Day that we were continuously doing. But for certain reason or others, we couldn't do. But we are our very dearest darling boy, darling personality of the professions, accounting professions, CMA, CA, Dr. Gopal Krishna Raju, for whom I think the attendees number is continuously increasing, galloping way. So I don't want to be stand between them, but let us listen from our Dr. GKR, and when the time will permit, we shall definitely tell. Only one thing I just want to mention before that, that this particular Indian Accounting Standard 105, I have encountered many issues when I was dealing with the treasury and others, because this is a very, very interesting, because many concepts of the professionals, the finance professionals, they have to counter with this Indian Accounting Standard 105. So let us learn, also relearn, because we have to relearn again from GKR. And I know that his style of teaching to us in a very short time, it really hypnotizes us. I know he will start with some numerics. We are all eagerly waiting for that. And let us start. Over to Dr. GKR, and I welcome Dr. GKR in this fascinating Sunday, which is another Maghi Purnima day, very, very auspicious day. So with this, let us start. Thank you.
Okay. Yeah.
Over to you, GKR. Bye.
Yes. So hope my screen is visible.
Yes, yes, yes. Very much, very much.
So very good afternoon, friends. At the outset, let me thank the Institute of Cost Accountants of India for this wonderful opportunity. Also, CMA H. Padmanabhanji and Chittaranjan Chattopadhyay and CMA ABS and Murthy along with officials Jain and Ria. And the hundreds of participants who are connected every Sunday. Very warm good afternoon to one and all. Today's subject is very special, 105. And before I venture into 105, I'll take you to uniqueness of this number. This 105 is very special. Standard itself is special, and the number 105 is also special. And section 105 of the Companies Act is about proxies. Okay, so this India is 105 also. An asset, if it is not useful for the business or the value is less than the carrying amount and decided to actually sell, what to do? Will I keep it in the non-current asset, fixed assets as building, machinery, etc.? This dodecahedral number. So dodecahedral number, they go by a formula, 5n square minus 4n. So 105. So you have 5 fingers. So just substitute 5 in this formula. 5n square minus 4n. So it is 25 into 5, 125 minus 4 into 5 is 20. So 105. So those numbers are called as dodecahedral number. So 105 is very special in that sense. Now, let me directly take you to one topic. This is this 3-digit standards starting from 101, 102, 103, 104, 105. So all these 3-digit numbers. Actually, you don't have 104. It is 101, 2, 3, and then it is 105. These standards are very important for one reason. It is in sync with the IFRS. So the exact replica of 105 is IFRS 5. Number one. Number two, the alignment will be very similar to IFRS. So word by word, paragraph by paragraph. So the definition forms integral part of the standards. Definition forms the integral part. So generally the 1-digit, 2-digit standard. So if you take Ind AS 2 inventory, definition will form part of the standard. Similarly, 38 intangible asset, definition will form part of the standard. But here it forms integral part because it is appendix. Appendix is also a standard. So that is what it means. So this is one point that we need to keep in mind. Now, I will take an example. So let me take to you an annual report. So this annual report, so I think it is visible. Yes, sir. Now this is an annual report of HMT Watches. So this is a company called HMT Watches, which was doing very well. Okay, it is a public sector company. Okay, so this is the name of the company and it is 22nd annual report. Okay, so this company technically is not in operation. Technically not in operation, but it is in the process of winding up. So that's why I've taken this as an example. And I want to start with approval letter of CCEA. CCEA is actually a department called Cabinet Committee on Economic Affairs. Okay, so this Cabinet Committee on Economic Affairs, now and then they will announce the revamping of the public sectors. Okay, now such a letter was actually an announcement was made in 2016 for closure of HMT Watches and to relieve all the employees on the company on VRS and by retrenchment under Industrial Dispute Act to those not opting for VRS. So now what will happen to the company? You have assets, you have liabilities to be paid. So what to do? So I'll just take you to the balance sheet and then I'll take you to the paragraph. So this is the audit report and all. Now look at the balance sheet, it's very different. Look at this balance sheet. Non-current assets, nothing is there. Property, plant and equipment, nothing is there. Okay, so that means no land, no building, nothing. So current assets, no inventory. Trade receivables, nothing is there. Only cash and cash even, that means bank balance. So some 20 crores is there. And some financial assets maybe to be sold and recovered. Other current assets, please look at this. Non-current assets held for sale. Interesting. Okay. So what is this standard all about? So this standard is all about non-current assets held for sale and discontinued operations. So I'm going to now focus on these two. There are two aspects I'm going to discuss separately. Now please look at this. So you have something called non-current assets held for sale. Okay. Actually last year also it was 2.96 crores. This year also it is 2.96 crores. So please wait. So I have a lot of points to be discussed with respect to this. That means this 2 crore was previously non-current asset. Now it has been classified. So this standard is more about classification of a non-current asset to non-current asset held for sale. Okay. And look at the profit and loss account. Continuing operation, nothing is there. Nil. Now I'll just take you to another company called Infomedia Press Limited. This is actually a Reliance group. Okay. Now here, please look at this is with respect to continuing operations. So continuing operations also making a loss. That because there is no income. Okay. Only expenses there. And discontinued operations also you have a loss. Continuing operation also loss. Okay. So discontinuing operation, so total loss is 378. So this has to be presented. Now I'll first go to the objective. So I'm just taken some examples, HMT and Infomedia. But now I'll first start with the examples and then I'll refer to the respective paragraph. This standard is a 42 para standard, only 42 paras, not more than that. So it's a simple, I mean in size wise simple, but in concept wise. Okay. So this standard doesn't teach you or prescribe you how an accounting should be done. So they only prescribe the standards, the various prescriptions are only focused towards the disclosure part and the classification part. Okay, so we can call this as CD. Okay, compact disc. So classification and disclosure. So these are the only two aspects 105 speaks about. CD. Okay, only CD. So classify how you will classify the information and how you will disclose the information. These are the only two aspects, main aspects. Okay, so now let me first take you to the objective. Okay, this is the para number 1. All of you guys, please pay your kind attention. I'm taking you to a very important paragraph called objective paragraph. Why this standard? Okay, the objective of this Indian accounting standard is to specify the accounting for assets held for sale and the presentation disclosure of discontinuing operation. So two parts. One is the classification. I said CD, classification, disclosure. Now, when you are going to classify, book value will be one amount. When you want to classify, will you classify the same figure? That is where the accounting is coming. Now I'll take one simple case study. Just a simple case study, then I'll relate to the respective paragraph. Please look at this. On November 13, okay, 1st November, a company which prepares financial statements up to 31st March classifies as a non-current asset held for. Now what is this? The asset is used. Now you have decided, the management has decided. So when you will classify is an important question. So you have certain conditions. So I'll just take you to those conditions. Look at this. So the conditions is the decision is taken that the asset will not be used and we are going to sell the asset. Use, sale. These two are two independent, different aspects. Okay. You want to use the asset, you want to sell the asset. Okay. So when you are able to realize and further uses another, or you have gone for a new machine. You have a machine, for example, let me take an example. You have a generator. You have a generator and the generator is 8 year. We have used the generator. The book value is, for example, the book value is 40,000 rupees. Okay, the book value is 40,000 generator. Okay, now you have decided to go for a new generator. Now old generator is not going. So new generator has come. Now what to do with old generator? So book value is 40,000. Now if you sell immediately, it will only fetch 35. So book value is 40, market value, fair value less cost to sell. Fair value, market value less the expenses involved in the sale in the market. That's cost to sell. So 35. So here itself there is an impairment of 5,000. So Damal, this is the accounting. So this step is discussed in detail. Okay, in detail in para number the 12, 18, 19 and 20. So the paragraph 18, 19 and 20, they speak about these things. So now look at this. So look at this. So initial, an entity shall recognize the impairment loss for any initial or subsequent return. What is the initial impairment loss? Look at this question. Initial impairment, 40 becomes 35. So you first have to classify. For a non-current asset, it has to go to non-current asset held for sale. So there is a separate line item. I repeat, guys, separate line item. Okay. And subsequent. Now, 1st November itself, it has now become 35. And 31st March 2014, it has fair value cost to sell is 27,500. So 35 again, it has become 27,500. So 7,500 impairment loss. Now there are two impairment. On 1st November, there is 5,000 impairment. On 31st March, there is 7,500 impairment. Total impairment 12,500. So from 40,000, it has come to 27,500. So 12,500 impairment. So please look at this. So which will be the right answer? November 5,000 and March 7,500. So this will be your the Two impairments. So as per para number, look at this para. So entity shall recognize an impairment loss for initial write down and subsequent write down to the extent that it has not been recognized. Okay. So as per 90. Okay, good. So now this is the purpose of this particular standard. So where am I? I am in actually para number 1. Okay, good. So the objective of this NDAS is to specify the accounting and the presentation and disclosure of discontinued operation. Wow. What is discontinued operation? Okay. Now, in particular, this NDAS requires. I'll come to this discontinued operations alone separately. Because discontinued operation you have to see separately, and assets, non-current assets held for sale. See, please understand one thing that not necessary. I gave an example of a generator, a diesel generator, which has been retired from active use, but ready for sale. Right? That one held for sale, ready for sale. Now the word is held for sale means sale when. I repeat the word sale when. Look at para number 8. I want everybody's attention to para number 8. For the sale to be highly probable, okay, the asset must be actively marketed for sale, available for sale, available for sale, available for sale, held for sale, available for sale. Okay, at a price that is reasonable. In addition, the sale should be expected to qualify for recognition as a completed sale within 1 year. So that you must disclose. So I'll just take you to HMT. Okay. So in HMT, I'll just take you to the discontinued and held for sale. Look at this held for sale. Look at. So actually there is no immovable property. Okay. Immovable regarding inclusive immovable properties, non-current held for sale. Okay, I'll just take you to one important paragraph. Look at this. This is a note number. The note number H, page number 36 of HMT. The company classifies non-current asset as held for sale, held for distribution to owners. HFS, HFDTO, held for distribution to owners. Now, you don't have people to buy, but the owners, that is the equity shareholders. So you are not going to pay equity shareholder. Whatever is left over, you are going to give to them. There are only 5 or 6 or 10 equity shareholders. Rather than selling the asset, recovering the money and distributing, I will give the asset itself to them. You sell, you recover, because marketability is not there. Okay. So companies which are on the process of the winding up, HMT is in the process of winding up. I'll just take you to this quest. Look at this. Okay. So the financial statements have been presented. Now I just take you to about the company, because director's report, if you see the director's report, you will have an idea about, look at this. This is the director's report. Okay, there is company, there is no sale. That means no operations. Okay, technically no operations. So no review in production, nothing. Okay, the company made a net profit of 2.7 crore, and this 2.7 crore is how they made this profit. It's only because of the discontinued operations. Look at this financial statement. So director's report, I'm directly now taking you to the P&L. Look at the P&L now. Look at P&L. The P&L says, yes, what is P&L? Yes, continuing operation, nothing is there. All a winding up process. So revenue from operation, other income, there is no operation activity, because discontinued operations means sometimes there are 7 units. Only 1 unit is discontinued, balance 6 is continued. So then 6 units continuing operations will come here. Now look at this info media. This 1, 2, 3, 4, 5 is continuing operations. Here also revenue is not there, only expenses. Actually, there is no continuing operations at all there. At least their expenses was. Here nothing, only discontinued operations. So that means there is no continuing operation. The entire company is discontinued and some disposal. Okay, and expenses. So this is your total expenses. This is for 2021. Exceptional items. There are some exceptional items. Para 2.22. I'm coming. Technically loss only, but there is a profit before tax. My God, 2.67 crores. Actual profit is only because of this exceptional item. What is 2.22? All these have to be disclosed separately. I just want to take you to this, and then I'll take you to the respective standard so that you are clear. Exceptional items. Profit on sale of machinery, 3 crores. Liability no longer required, return back. Provision no longer required, return back. So 8 crores. Okay. So very interesting point. Now I am taking you to the respective paragraphs to give you the reference. Whatever we have just now seen, it is there in the standard. So I'll now take you to the first appendix called discontinued operations. Yes, this is your appendix A. You have 13 definitions in this. I repeat, guys, there are 13 definitions, and the fifth definition, 1, 2, 3, 4, 5, discontinued operations. Okay, so now what is this discontinued operation? A component of an entity. Now, a component of an entity can be 7 units are there. 1 unit is discontinued, so that 1 unit will be a component. Sometimes the entire unit also can be a component. A component of an entity is an entity itself is a component of an entity. Sub-entity is also a component. Okay, so that neither has been disposed of or is classified as held for sale. Please understand. So held for sale means generally there will be continuing operations. Certain assets are not used for business. Okay. Now I'll come to this concept called when you will classify as held for sale. I'll come to that. Okay. So I'll come to that separately. Okay. In para number 6, 7, 8 and 13. 6, 7, 8 and 13 will speak about conditions for classified as held for. So neither you are classifying as held for sale. So when it will be classified as held for sale, example, some of the machineries which you have been using for business, it has for more years it has worked, or you are going for a new machine. So therefore it is being retired from active use. So naturally you have to sell in the open market. Okay. Now you have to sell in the open market. You find a market price. Sometime what will happen? You have to sell it within 1 year. That is what they say. They say highly probable that you will sell within 1 year. Highly probable means you go to the market and you take to the market and say, machines available, please come and buy. People are coming and see. That is called highly probable. But look at this balance sheet of HMT. Look at the balance sheet of HMT. Very interesting. What is it? Here, last year also 2 crore, current year also 2 crore. Now you have one para called Appendix B. Look at Appendix B. Extension of period required to complete a sale. More than 1 year. Okay, just now we saw in the para number 8 and para number 9, generally 1 year. So now an extension of period required to complete a sale does not preclude an asset from being classified as held for sale. See, last year also same figure, this year also same figure. What para number 8 says 1 year. Para number 9 also says 1 year. I'll just take you to that para. So where is para number 8? Para number 8, I was showing you that 1 year. I'll take you to para number 9 also. Look at para number 9. Now I'll take you to Appendix B. Events or circumstances may extend the period to complete the sale beyond 1 year. So HMT cases, it is beyond 1 year. An extension of the period requires to complete a sale does not preclude. Same para is used there also. Okay, from being classified as held for sale, just because the delay is caused by events or circumstances beyond control. I want to sell, but what is it? See, somebody will say, what is your age now? 27 years. Time to get married. Why are you not getting married? No, I'm ready to marry. Next year will come. Hey, are you married? How many children you have? No, I was ready to marry, but nobody is coming forward. You should only take effort and go and take one single rose and propose. Then only things will happen. Nothing you are doing, nobody will come forward to marry you. See, today then 27 will become 28, 28 will become 30, 30 will become 40 only. So then, if the delay is caused by events or circumstances beyond the entity control, there is sufficient evidence, okay, that you are committed to the plan. Committed to this plan, very important. What is committed to the plan? I am committed to marry. Only thing is, I am not getting a girl or a boy. For a girl, boy is not, they don't get, for various reasons, okay, to sell the asset. This case is being the criteria met in Appendix B. That you have to mention. Okay, I'll just take you to HMT 2.8. Para 2.8. I'm just taking to 2.8. All of you, please pay your kind attention. Okay, 2.8. Wow. Look at this. Land 24 lakhs. Building 2 crore. Okay. Now, this is your entire 2.8. Look at this. All this 2.8. This up to 2.8. So the company is in possession of the land. Okay. So purchased 33 acres. During 2003-04, based on MOU entered in HMT and company, certain lands were sold and profit amounting to 114 crore were account HMT books. Equivalent value of the land is yet to be identified and transferred to the company. The company is in the possession of gift land located at Bangalore, measuring 89 acres. Okay, of which 7 acres have been encroached. Matter has been taken up with government to shift the unauthorized occupants. Non-current as held for sale include immovable property vested under the scheme arrangement approved by government. However, the mutation of title deeds are yet to be carried out. So, you have encroachments, you have to mutate the title deed. All these are the reason why people may come and see, but they say encroachments. The title deed is in some other company, yet to be transferred. So then the people can directly make payment to HMT watches and then the title can. So much of issues are there. So that is why Appendix B is applicable. Very, very interesting. So Appendix B example is this. Okay. So it's a very interesting part. So this will be the case where the criteria of Appendix B are met. Now, I'm now taking you to discontinued operations. Now, I'll now take you to the disclosure part. Now, please look at the disclosure part, which is given in para 33. This is discontinued. Now, how will you do this discontinued? A component of an entity comprising operation can be clearly distinguished. Now, I want to bring to your kind attention one para called 33A. This 33A is not, it's missing here. Oops. 33A is missing. This is the difference between IFRS 1 and Ind AS 105. 33A. 33A is there in IFRS 5. Okay, IFRS 5. But 33A is not there in Ind AS 105. Why? The prescription in IFRS 5 is not a Desi prescription. So that prescription is not prescribed in 105. Now what is that? All of you please pay your attention. So I am now taking you to that Appendix 1, not AB, Appendix AB. After the Appendix 1 is there. In this, please pay. Requirements regarding presentation of discontinued operation in separate income statement. See, this what do you call this? IAS 1. What is IAS 1? International Accounting Standard 1 and Ind AS 1. Ind AS 1 is your presentation of financial statements. So there, profit and loss account can be a single statement or an option is given in IAS 1 that you can give it in 2 statements. That is your OCI, other comprehensive income as 1 statement and this. Similarly, in IFRS 5, okay, there is an option to give separate income statement for the discontinued operation. But Indian accounting standard, no. Look at the Info Media Press Limited, profit and loss, only 1 statement. Okay. In this, up to 5 is continued operation. After this, discontinued operation. Discontinued operation, how you got a loss of 134 lakhs, 1.34 crores. There will be a separate para. There will be a separate note. Go there, it will explain how it is. So, and again for continuing operation, you have to give the EPS. Discontinued operation, you have to give the. So this is mentioned separately. Please look at 33A. Sorry, not 33A, para number 33. What is para number? Single amount, post-tax profit. What is a post-tax profit? This is your P&L. Let us see the P&L. This is your profit and loss account. Where is the P&L? Sorry. Yes, profit and look at this. So what the standard says, what is a post-tax profit or discontinued operation? This is profit before tax, tax, profit after tax, post-tax. So 2.7 crores. So you have to give a single amount, and you should also give this, the revenue, expense, pre-tax profit. Look at this, revenue, total revenue, expenses, okay, and pre-tax profit, profit before tax. My goodness, interesting. And the related income tax expense, so that is also there, and gain or loss, related income tax expense, and all this. Net cash flow is very important. Cash flow also you have to mention it. So I'll take you to the cash flow statement. All of you please come to the cash flow statement. And this is cash flow. Look at this. Now what this para says, the cash flow attributable to the operating, investing and financing activities of discontinuing operations. These disclosures may be present either in the notes or in the financial statement. Now come to this cash flow statement. So operating activity, profit before tax on continuing operation dash. Profit before tax on discontinued operation 2.7 crore. Now this 2.7 crore came. Reconcile. So here, of course, since there is no operations at all, you only give the cash flow with respect to discontinuing, and if operating is there, you have to give that as well as discontinued operations separately. Now here, since only discontinued operations alone are there, whatever you give belong only to a discontinued operation. Now I'll take you to this info media. Look at info media. So here, cash flow. So here, all of you please look at this. Actually, you have the continuing operations loss also, discontinuing operations loss also. Now come to this cash flow state. So this is your cash flow state. So cash flow from operating activities. Okay. So financing activities. This is your change in liability. So now here, I'll just take you to the borrowings, current assets, bank balances, financing. So 135.44. This 135.44 we already have here. I'll just show you one. Sorry for that. Okay. So continuing operation 244.5. So where is it? They have given the cash flow statement. I think the notes are not pakka here. So I shouldn't have taken this. But anyhow, since both are there here, I took this as one not properly given with respect to the cash flows, because cash flow statement, they made it very clear that you have to give the discontinued operations cash flow activities and the continuing operations cash flow activities separately. So whether it is from OIRF, okay, so that distinction has to be given. These disclosures are not required for disposal groups that are newly acquired subsidiaries that meet the criteria to be classified as held for sale and acquisition. So P para 11. Okay. So this is very, very interesting paragraph where they even go to the cash flow point also. As far as HMD is concerned, you don't need that because there is only one kind of activity. So two kind of activities are another, continuing activity, discontinuing activity. Both activities, if it is there, your cash flow statement also must give. Of course, you have a separate standard for it. Okay. You have Ind AS 3. Okay. Ind AS 3 speaks about that particular part also. Okay. So whatever has been mentioned here is also repeated even in Ind AS 3 also. Okay. For your kind information. Now let me take you to 34. This is very important. An entity shall represent the disclosures. For the prior year, my goodness. Actually, till last year, there was no discontinuing operation. Only current year you have discontinuing operations. So then comparatives you have to give with respect to that, what do you call it as the component of the entity? That component of the entity, what is the respective activity, net operational activity with respect to. So discontinued operations. So same aspect previous year will be continued operation with respect to that component. So you have to show that separate. So from the continued operations, remove that part and show it in the discontinued operations portion. Very, very important. So this represent means you have to recalculate. My God. So this is a very important paragraph, guys. So an entity shall represent the disclosures for prior period represent financial statement so that the disclosure relate to all operations that have been discontinued by the end of the reporting period for the latest period presented. I was searching for such a annual report, but I'll just find out 2-3 additional annual reports and I'll share that in my blog with respect to cash flows, with respect to previous year it was continued operations and current year it is discontinued. So therefore the comparatives has to be given. So 2 annual reports I'll just present before you so that you can just have a comparisons about. So very, very interesting paragraphs, guys, especially 34 and 33. Objective is over. Now I'll now take you to para number 5. That means this standard is not applicable. This standard is not applicable for certain standards, especially deferred tax asset. Okay, so you may actually you will have a deferred tax asset with respect to one unit. Now it is actually discontinued. So then what to do with the deferred tax asset? Don't worry. Ind AS 105 doesn't give an answer. Ind AS 12 gives you an answer. Similarly, assets arising from employee benefits. Employee itself is gone. Then what to do? Employee he resigned. Then what to do with that assets arising from employee benefits? So we don't have an answer in 105. So because employee is an asset. So we have created assets for that employee. Now what to do with that? Okay. So we don't have answer in 105. It is in Ind AS 19. Similarly, financial assets within the scope of 109. So which is originally you have invested for a particular purpose, but now the company is not in operation. So what to do with that? Okay, so you don't have an answer here. You have answer only in 109. Similarly, non-current assets that are measured at fair value less cost to sell as per agriculture. So that means you have stopped that operation, that vertical called agro vertical you have stopped. So what to do with that assets which has been measured at fair value? Then find out what is the what do you call as the realizable value, and that will be your fair value. So the difference you have to transfer that to P&L account. So that has been given in Ind AS 41 itself. You need not come to 105. So all these are the exceptional points which you need not refer 105 because a similar provisions are there in the respective standards. Now I'll just take you to para number 6. What is HFS? Classification. This is the first step. An entity shall classify non-current assets held for sale if its carrying amount will be recovered principally through only sale transaction rather than use. I'm not going to use it. That means I have decided not to use. Okay. So now what is the conditions? Look at the first one para. For this to be the case, the asset must be available for immediate sale in its present condition, subject only to the terms that are usual and customary, which is highly probable. Thus, an asset cannot be classified a non-current asset if the entity intends to sell it only in the distant future. No, we will sell it 2 years later, 3 years later we will sell it. So that means it will not be classified as held for sale. So the moment it is held for sale, that means the organization, the entity is having intention to transfer it immediately within 1 year. Immediately within 1 year. Now I just want to take you to one more para called 12A. A non-current asset classified as held for distribution to owners. Now what is held for distribution to owners. I'll just take you to another paragraph, that is distribution to owners 15A. An entity shall measure a non-current asset classified as distribution to owners at lower of its carrying amount and fair value less cost to distribute. Actually, I was searching for certain balance sheet where, see here, HMT has classified it as in your balance sheet non-current asset held for sale. I was also looking for another balance sheet where non-current asset held for sale, non-current asset held for distribution to owners. I was looking for that balance sheet. I'm just finding. I'll find out. Don't worry. Actually, there are a few balance sheets like that. Okay, so I can also share you that balance sheet also. So where it will not be sold in the market. That means shareholders are ready to take. Now, when they will be ready to take, after disposal of all the assets and paid off the liability, the surplus has to be distributed to the shareholder. What will be the surplus? The assets only will be surplus. These assets will be distributed. So the non-current assets which is held for distribution to owners, distribution to shareholders, not to sell, realize and then distribute. No, I'm not going to sell. I only decided that my shareholders, my owners will take it. So that means there will be a separate disclosure for it, that so-and-so asset is only held for distribution to owners. So this is also a very important point to note down. Now come to para number 17. This is a very important para. Okay. When the sale is expected to occur beyond 1 year. Okay. Beyond 1 year. Now I'll just take you to some paragraphs. Okay. Especially I want to take you to para number 2.8. I have already discussed. I'll now take you to the para number. So I'll take you to held for sale. Look at this. This is your property, plant and equipment. This is held for sale. Okay. I'll now take you to this is held for sale. Other matters. Now look at this. Regarding inclusion of immovable properties and non-current held for sale and non-carrying. Okay. Mutation of title deeds, hence the title to the immovable property could not be verified. It's very, very important. This is actually given in the audit report, because it is mutation has not happened. If the mutation has not happened, the asset is there in the balance sheet, but the ownership is not with the company. So then what the auditors will say? Auditors will say title could not be verified. That's all matter of. So this is one more point I want to share. And I want to share with you another interesting point. This is one point I want to share with you. Within 12 months, disclosure cost. This is all same, the same paragraph. Now please look at the previous one. Items of property, plant and equipment is held for sale within 12 months. This 12 months is taken from para number 8. Okay. At the end of the reporting period, disclosure lower of the carrying amount or fair value less cost to sell. This is what your para number the para number 18 speaks about. Okay, good. So then I'll now take you to the discontinued operations. Discontinued operations. This is the CCAA approval that was decided that the tractor division will be closed. Accordingly, the assets have been classified based on definitions under Ind AS 105. It is planned that the company will lease out the major portions of land and building to third party to generate lease rental, and accordingly it is classified as investment property. Okay, actually in the balance sheet, I just want to take you to the balance sheet. Look at the balance sheet part. No, this is balance sheet. Because Ind AS 40 will be discussing separately. Look at this. Yes. So you have cash and cash equivalent, other financial assets, current assets 2.7 and non-current assets. So there is no investment property. So what is investment property? Land and building, which you are only going to use it for the rental. Now the rental will come only after the property comes in the name of the company. So that means from 296.06 it will go to investment property. So that means you will actually sell, you will give it for rental. So that will happen. That means another reclassification will take place. That is as per Ind AS 40. So we are going to have it a separate standard, India is 40. Okay, so that is what that was discussed there. Okay, so now I'll now take you to this part. Now please look at this. Yes, other equity. Please look at the opening. I think it's visible to all of you. Total attributable loss. This is the reserves and surplus in loss total. So out of this 2 lakh, this is in rupees in lakhs. Okay, so 269, 251 lakhs. Majority is actually discontinued operations loss. So the majority of the negative aspect comes only from. So I'll just show you the balance sheet. So this is your balance sheet. Look at this balance sheet. My goodness. My goodness. Look at this. So you have this much money to be paid. So 269 lakhs 378. So that means in terms of crores, you have 2,694 crores. 2,694 crores you have to pay. 2,690 crores is loss. Okay, for your kind information. So this is the scenario. Okay, and so that means the liability is Govinda. Okay, liability is gone, lost, nothing is there. So very, very unique balance sheet. Okay, very unique balance sheet for your information. Okay, so very unique. So that is why I've taken this for example. Last but not the least point, I'll just take only one more point. Okay, that is abandoned. Okay, abandoned. I'll just take only one. Para 13, last point. Okay, para 13. Now, there is a difference between abandoned. Non-current assets that are to be abandoned. Now, one thing please understand. Now, trying for marriage. Okay, somebody is trying for marriage. He says, I have now decided to marry. Oh, when? No, within 1 year maximum, I will be married. So that means he is ready. He is seeking to marry. No? A boy or a girl. Okay. Now, at the end of the day, nobody is ready to marry that person. So then what to do? He'll drop the idea. He'll drop the idea to marry. So once the idea to drop to marry, that means he will continue his life as a spinster. Okay, very similar. Very similar. You have a machinery. Machinery, you have used it. Now you want to sell. Now when you want to sell, nobody is coming forward to buy. Now what to do with that machine? What to do with that machine? Nobody is coming forward to buy. I put a board. Machine available, I say, please come. Nobody is coming. Know what to do? Okay, keep the machine, use it. Till the machine will rust and die, it will not work. So you are going to use it. So that means I will not classify as held for sale. It will be only non-current assets. So entity shall not classify as held for sale as that is abandoned. So abandoned will not be used, but it will not be held for sale. Then that will be depreciated without use. That means efflux of time. Efflux of depreciation will be done even for efflux of time, even though you don't use it. Okay, even though you don't use it. So that will come under abandoned. Very, very interesting. This is because carrying on will be recovered through use. Continued use means whether you use it or not. The concept of use here means efflux of time. Okay, maybe if it is possible to use it. If it is not possible to use, you will go for a majority of the government. The what do you call it as the machineries, assets. It is all like that, abandoned only. And now Madam Sitaraman in this new budget has announced one concept that the vehicles, okay, the polluting vehicles has to be scrapped, has to be abandoned, and then new vehicles has to be bought. Okay, so that announcement has come. It's a very good announcement in the new budget. Okay, so accordingly, and non-current assets to be abandoned includes non-current assets that are to be used to the end of the life, and non-current assets that are to be closed rather than sold, because no bride or no groom available to marry. What to do? Then abandoned. So spinster till life. So guys, thank you very much for this wonderful opportunity. So my special thanks to the Institute for the opportunity to share my thoughts on 105. and I'll be open for any questions. And over to Padmanabhan ji and the members
Thank
for
you,
the
thank
feedback.
you, thank you, GKR Bhai. Of course, today also huge number of participants are there, and a few questions. In fact, our Riya Chaudhary madam has helped us in sharing the questions posted by the members. Sanjeev Kumar Banerjee sir, he has asked, sir, can the Ind AS 105 apply to asset become obsolescence?
Can 105 applied to asset becoming obsolete? Yeah. Just now I said that abandonment. Yeah, it will apply.
It will apply. Oh, his another question is, can I reclassify a fixed asset to non-current asset if it becomes obsolescence?
No, actually, there is no concept called fixed assets classification to non-current asset. Non-current asset will have fixed asset, property, plant and equipment. So property, plant and equipment, it will be classified to non-current asset held for sale. So non-current asset classification means you are going to use it. Held for sale classification only if the management decides I'm not going to use it because the asset is going to be replaced. Number two, the asset is going to be sold maximum within 1 year of time because it is highly probable we have people to buy.
Okay, his another question, Sanjeev Kumar Banerjee sir, does Ind AS 105 only apply in the case of winding up?
Not necessary. Winding up of the company, HMT is an example for winding up. Okay, but because there is a scheme of arrangement for winding up is also been approved. Number two, it will also for reorganization of the business. For example, I was giving an example of 7 units. 7 units are there. Only 1 unit is not giving me profitable. So that unit alone, I want to discontinue and abandon or discontinue, and I will sell. And slowly those assets I will sell, realize, pay the liability. So the discontinued operations revenue expenses alone has to be shown separately. So not necessary, only in winding up cases. Winding up is also one example.
Okay. Mahesh K. Mittal sir, he is asking whether the fair value changes in assets held for sale will come in OCI or in P&L statement.
I think that this is a different question, not pertaining to the standard, but anyhow, since the question has come, whether the fair value change in assets held for sale will come in OCI or in P&L account. So we were discussing about this with the case study that 40,000, once you have decided to held for sale classification, the fair value less cost to sell was 35. So the difference of 5,000, you will treat it as an impairment loss in P&L only. Then the 31st March became 27,500. So 7,500 again it is only charged off to P&L account as impairment loss. So no to OCI, only to P&L account.
Okay, SK Banerjee sir is asking, does it mean that Ind AS 1 and Ind AS 105 should go together as far as disclosure is concerned?
No, Ind AS 1 is with respect to presentation of financial statements. There they mentioned that profit and loss account should be a single statement. But IFRS, in IAS 1, there is an option. You can give the P&L as statement 1, OCI as statement 2. So in Ind AS 1, that 2 statement concept is not permitted, only single statement. Now 105, they go one step ahead. If you have a discontinued operation, that also should form part of your P&L. You cannot show that as a separate statement, unlike IFRS 5. In IFRS 5, discontinued operation can be shown as a separate statement that has been removed. 33A para has been removed. So in Ind AS 105. So that is the only difference.
Okay, MK Mittal sir is again asking, when the assets are held for sale transfer to secured creditors, whether such assets will be valued in the balance sheet at fair value or value likely to be realized by way of transfer to secured creditors.
Well, very good. Now secured creditors, for example, The moment the assets held for sale is actually secured by a secured creditor, can I classify as held for sale? Unless and otherwise the secured creditor permits. No. You pay me. You are not going to pay. So therefore, this asset you sell and pay me. That concept will not apply at all. Why? Because that asset is encumbered or secured by the secured creditor. Then secured creditor has a right over that asset to sell, not me. So the moment the asset is secured by a secured creditor, I don't have a right to classify the asset as held for sale. It is a secured creditor will decide.
Okay. MK Mittal sir is asking, when the company is being sold through NCLT to successful resolution applicant, whether the assets will be shown as assets held for sale till the assets of the company along with all other assets are transferred.
No. Say this, you need to appreciate one thing. Under NCLT, if it is a going concern, that means company is under operation. So if it's company is under operation, so that means employees are there, factory is there, suppliers are there, customers are there, manufacturing activities are going on. So that means transferring the non-current asset to held for sale, it will be a decision, it will be a business decision, unless and otherwise there is a replacement of asset. So therefore, this concept of held for sale will not apply for NCLT because you are going to sell it as a going concern. Okay. Next.
I thank Mahesh K. Mittal sir because he is covering both that NCLT, IPA, everything is coming here. You being an IPA professional, you have answered very nicely. Now, our good friend Devarajan Swaminathan sir is asking, sir, depreciation on abandoned assets, will it be included under normal depreciation in the P&L account?
Wow, good question. Good question. Now here, it is Ind AS 16. Ind AS 16 also will apply because abandoned assets, it will form part of property, plant and equipment. Now, when you are applying the depreciation, the useful life of the asset, the remaining useful life of the asset. So RUL, remaining useful life has to be estimated. So normal life will be 4 years. Now abandoned assets, life will be 2 years. So naturally accelerated depreciation will be there. So your question is very important, vital, because abandoned asset will be at a special rate because the remaining useful life will decide what to be depreciated.
Oh, great. Sanjeev Kumar Banerjee sir is again asking, what is the difference between discontinued and abandoned in the treatment of accounts as per Ind AS 105?
Okay, but Sanjeev Kumar Banerjee, please don't confuse both. Discontinued operations, what is the revenue, expenses and profit has to be shown in P&L. But abandoned is a concept you should apply to assets. Discontinued is a concept we apply to operations. So it is a P&L related concept. Abandonment is a concept related to assets, a balance sheet concept.
Okay. Our friend CMA Ramu sir is asking, what is the treatment for transfer of HMT watches non-current held for sale to HMT Limited Holding Company?
Treatment for transfer of HMT watches non-current held for sale to HMT Limited. Okay, so that means they are going to buy the asset. So the purchaser can be anybody. So not necessary it should be a related party. So a related party also can buy the asset. Only aspect is whether the price paid by related party for the non-current asset held for sale, is it at arm's length and is it at market price? So what is the treatment? Is a normal
GKR Bhai, sorry for interfering. In fact, he is adding one more this thing to that. The present value of non-current assets was at cost.
Okay,
This
so
question.
the present value of non-current asset was at cost. Okay, let it be. So that means let us take the non-current asset held for sale is at a cost of 70 lakhs. That means if your holding company is buying that particular asset, let it offer at the market price. Cost may be 70 lakhs. So in the market, is it available at 70 or maybe since you have already used that asset and you are going to declare it for sale, so it will not fetch at cost. It will only fetch at market price. Market price maybe 12 lakhs, 2 lakhs, 10 lakhs. So the related party who is going to buy should offer at market price or more than market price.
Okay, CM Revant Siram ji is asking whether Ind AS 105 is applicable for 1 unit per mines discontinued out of many mines.
Yeah, applicable, definitely. That is why it is called in the definition I mentioned, the fifth definition in Appendix A, it is called a component of a unit. So a mine, so maybe he is speaking about a Neyveli Lignite Corporation or any other coal mines. So one mine is a component of a company. So therefore, India's 105 is applicable.
Okay, in fact, again, our CMA Ramuji has consolidated his own previous two questions. You have already answered. So with this, we are coming to the end of the question answer session. So nice of you, GKR Bhai. And one more demand is there from our members, GKR sir.
Yes.
I will take the permission of Chairman, Direct Taxation Committee and Indirect Taxation Committee, because many of our members have listened to you about that 1 hour very nice briefing about the recent budget. So other than this Ind AS series, they would like to hear from you about the budget and the impact and whatever you discussed already, that they want to do it through the Institute Forum. So on some other day, some other occasion, when Chittoda and Ashit Bhai both agree, members are when members are demanding, I am also demanding. A dil mange more.
Yeah.
So we want that. And today you mentioned about IFRS. So immediately an youngster has written to me, sir, why GKR sir is taking only Ind AS some sessions, exclusive session on IFRS also if possible.
Yeah.
So I am making it open because these messages came while the Webint series was going on. So I, with your permission, GKR Bhai, hand over to Chittoda, Chittaranjan Chattopadhyay sir, who is a great fan of yours and keen follower. Whenever he misses the Webint as a coordinator, he is a person who is watching your Webint series, which is uploaded in the Institute website. And also, I request GKR sir to kindly put his blog in that chat box so that many of the members would like to have your presentation, everything through your blog also. Of course, they will go through our Institute website, but still they are demanding. When they are requesting, I have to put forward that, sir.
Yeah.
So I hand over to Chittoda for his views as one of the coordinators. Then Murthy sir will join. Over to you, Chittoda.
Thank you, Papan Bhai. Again, the mesmerizing, enchanting, whatever adjectives are there, it will not be sufficient for GKR for this sort of programs. In a very short span of time, the thirst increases, but it will mange more because it is not possible to extend this time because this is a very limited time we are always in this particular morning. But one thing is clear, today's discussions, the many learning sessions we have today, through GKR, today we could understand what are the requirements of Indian Accounting Standard 105. And he has very lucidly explained what is discontinued operations. In fact, many questions have come. What is the deliberation, the type of process of deliberations was so lucid. It was really very enchanting for us. And he also described what are the presentation requirement in case of discontinued operations. That he has also mentioned here. And with this also the question answers which has been raised, I think that some questions are definitely of very important for us also, because attendees are keenly listening to Dr. GKR. And one issue is always comes to my mind, Papan Bhai, you also remember, you also definitely agree and our Dr. Murthy, who is also doing is level based for the cause of professional attainment by our youngsters. This particular endeavor from our CAT committee and AT board for enrichment of knowledge of the boys, because institute cannot afford to have all this knowledge in the knowledge pack of your CMS syllabus. So these are all value add and add-on program. It has been excellently designed and excellent in the day on Sunday. Such TRP, I am really fascinated because many people are joining before the lunch. They will be listening and they will be discussing over the lunch table, of course, youngsters. And when the interviewers asking questions to the youngsters, they should remember Dr. GKR, how they should groom up themselves. It's not that the syllabus is not covering. Syllabus has covered the knowledge, reasonable knowledge, but the expert knowledge, how to get it. And of course, the interviewer also, they should be liberal enough to just to know the concept, because it's very difficult for a boy to that nitty-gritty of Dr. GKR, the way he was navigating through the HMT case. It's really fascinating. It requires definitely the day toil, the diligent effort what he has taken to his career. That's why I'm a fan of Dr. GKR. It's not like that, because he has shown that how to become a successful professional in this way. It's not only a qualification matters. It matters that how far he is passionate. He's just taking this matter like a Gita, like a poetry, whatever you say. He's taking this matter because this particular section, I remember this particular Indian Accounting Standard 105. Again, I'm reiterating. While working in the bank, this particular Indian Accounting Standard is very much important for any officials who are dealing with the many corporate credit and corporate project, because the abundant project, this language, whatever is there, unit, abundant unit, discontinued unit, all these things came to the notes on the accounts and others, auditors' observations, etc. So this program has become really an eye-opener for every youngsters, that they should learn, but definitely vigorously. Before going to interview board, they will be understanding that yes, as a finance personality, as a professional, when I'm going to face the interview board, I have to responsibly, I have to reply to these queries. Only degree doesn't matter, degree is a passport, but the institute's endeavor through our committees, especially CAT and AT board, the way it is being done, I understand that it will be definitely adding value to all our professionals, young professionals, and those who are also working in the organizations in a responsible position. So again, I convey my heartfelt thanks to entire team of CAT, who RK Jain, Semeria Chaudhary, they are all been here to help us to navigate the program in a very successful way. And importantly, I request our chairman, our CAT AT board, the proposal what he has mooted just now, that there should be on the budget proposal in the union budget, if Dr. GKR comes with his all explanations, that will be more and more valuable for us to understand that how this budget will be helpful for the people at large and the professional in general. With this, I'm really thankful to Papan Bhai for giving me an opportunity to express some of my views on this particular day of Indian Accounting Standard 105. Thank you.
Thank you, Chitoda. So nice of you. In fact, Dr. Murthy sir, who is very famous in writing articles and giving interviews in All India Radio, Doordarshan and other channels, he also had the opportunity to deliberate on budget very recently, but being the coordinator for this particular program, I request Murthy sir to say a few words and sum up this.
Thank you, Mr. Chairperson. Sir, did anybody hear? I'm again repeating. Did anybody hearing that cat produces tigers? No, but now we have seen CAT committee through its chairperson and through its resource person GRK is producing tigers. After listening to Mr. Raju, Gopalakrishna Raju, every cost accountant, being the capacity of auditor, student, is becoming a tiger, an expert in the subject. Hats off to Mr. Raju. The 42 para standard supported with 41 questions. has been successfully completed by Mr. Raju in 40+ minutes effectively to reach, to understand, to make them familiar, to make them comfort, to make them tomorrow to use at the desk. Tomorrow, if they go to their desk, they will please read this 41 questions and again read this audio, and you will become very good at subject and you will become powerful. I told you, cat produces tigers. Thanks to all of you. Good job by my beloved chairperson and also Mr. Knowledgeable Razu. Thank you.
Thank you so much, Dr. Murthy sir. In fact, Chitoda, when you were telling about that Ind-AS and interview and other things, I saw a post in one of the social media group by Anirban Biswas sir. Very sensible post he has observed and he has shared for the generation next, where he is telling that cost accountants are the best and how the CMA students in future can groom themselves and be very much in the competitive world with some little bit experience of 3 years to 5 years, or whether it is CA, CMA, CS or any profession for that matter, updating the knowledge and facing the interview board in their plus point will give them a very good shining in future. And you both were telling about the CAT chairman. In fact, I thank the joint director Rajesh Jain sir and the team who have in fact helped us for the entire series of preparing and doing a lot. Thank you very much, Rajesh Jain sir. And with the permission of joint director Rajesh Jain sir and Chitoda and Murthy sir as our coordinators, I request Riya Chaudhary madam to feel very happy to propose thanks from the heart of hearts to our GKR Bhai and for the entire participation of members. Over to you, Riya madam, for expressing thanks from your heart.
Thank you so much, sir. We are immensely thankful to all the respected members, students and participants for joining the session in good numbers to encourage us to deliver in better manner every time. Thank you all for making this program a grand success. I am very thankful to our today's resource person, CMA Dr. Gopal Krishna Raju sir, for joining us today in today's Webint. We are very much thankful to CMA H. Padmanabhan sir, Council Member and Chairman Committee for Accounting Technicians, International Affairs Committee, Public Relations Committee and AAT Board of the Institute of Cost Accountants of India. We are very much thankful to CMA Dr. KCH AVS and Murthy sir, Central Council Member and Chairman, Regional Council and Chapter Coordination Committee, Journal and Publications Committee, Committee on Cost Management for Public and Government Services and Sustainability Standards Board of the Institute of Cost Accountants of India. We are also very thankful to CMA Chittaranjan Chattopadhyay sir for his kind presence in today's Webint. He is the Central Council Member and Chairman, Indirect Taxation Committee, Banking, Financial Services and Insurance Board, MSME and Startup Promotion Board and Cooperative Development Board of the Institute of Cost Accountants of India. We are very much thankful to all of you, sir, for joining us in today's event. I'm also very much thankful to the Secretary of CAT Committee, CMA Rajesh Jain sir, for giving me this opportunity to join, and thank you so much, sir, for joining this event. So we are very thankful to all our participants and members and students for joining us in today's event. Thanks to all of you. Have a great day. Thank you. Over to Papan, sir.
Yeah, thank you so much, Riya madam, and thanks to GKR Bhai, coordinators Dr. Murthy sir and Chitoda. In fact, Chitoda and Murthy sir told we are having limited time, but no, we are having more time. The next, once this term is over, 2023-27, we will have the continued services of Chittaranjan Chattopadhyay sir from Eastern region and Dr. Murthy sir from Southern region, and definitely this series will continue. So you don't worry about one chairman or this thing. It's a teamwork, and definitely Chittoda Murthy sir will ensure that this particular series continues for the benefit of this thing. Like Murthy sir told in the first Webint, learning is a continuous process and organizing people also will do it. Thank you very much, Chittoda. Thank you so much, Dr. Murthy sir. And thank you so much, GKR Bhai. remembering the request of the members with regard to budget, IFRS and other important thing also. Please remember that.
Yes, sir.
So
Yes,
thank
sir.
you. Thank you from our
Thank you,
team, Rajesh Jain sir and Riya Chaudhary madam and myself. We sincerely thank the coordinators and the speaker on this occasion. Thank you, GKR Bhai, Chitoda,
sir.
and
Thank you, thank you, thank you.
with this, we come to the end of the session. And dear participants, please be rest assured, next Sunday we are having a very special guest. CEO is joining. Like that, we are planning to bring some important personalities from the forthcoming Sundays also. Thanks to them in advance. Thanks to GKR Bhai for taking the extra effort. So we shall meet for India series next Sunday, same time, that is 12 noon. Thank you very much from all of us. Wish
Thank
you
you.
a very happy and healthy week ahead. Thank you. Thank you. Thank you.
Thank you.
Thank you, sir.
Thank you.